Let's talk about the USA and China trade deal. On Sunday, we got news that the United States and China had come to a trade agreement, and we saw social media popping off. Everyone was talking about this big news and talking about how Monday was going to be this crazy day for the markets. And while we did see some crazy, not crazy movement, but we did see some movement in the markets on Monday. I would say that when we got the details of this trade deal on Monday, they were a bit underwhelming. So in this video, we're gonna cover the details of this trade deal. We're also going to look at how markets reacted. We're gonna talk about what it means for different assets, and we're gonna look at what it means for China as well as the United States. Before we do get into the video, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. The trade deal was announced in a post from the White House on Sunday, where they basically said that the United States and China have reached a trade agreement. And then on Monday, we got the details. So let's get into the deets, guys. Here is the big trade deal. The US cuts tariffs from 145% to 30% on China for 90 days. And China cuts tariffs from 125% to 10% on the US for 90 days. That's it. That's the trade deal, right? That's not really a trade deal. That's pretty much just a tariff pause. It seems like nothing was really achieved by the US in this trade deal. I mean, what did they really get? They imposed these heavy tariffs in early April, and they've just ended up conceding to all these countries and lowering the tariff. So I think it's funny that you see people on social media like celebrating this trade deal as a big success. Like, look at the details of the trade deal. Was this a success? And then when you think about the fact that there were already exemptions for key imports in place, things like electronics, smartphones, computers. You could also look at medical supplies, food and chemicals. Those essential goods had an exemption from the 145% tariff. And then also critical minerals like lithium and cobalt already had an exemption. So to me, it just doesn't seem like a whole lot changed with these tariffs. A lot of US companies weren't paying the full 145% tariff anyway. Obviously, it's going to benefit those companies that were paying that 145% tariff. There's a big difference between a 30% tariff and 145%. But to me, it just kind of seemed like not a whole lot changed, and really this was just a tariff pause that was branded as a trade deal to provide some positive sentiment to the markets. And really, it seems like the USA was kind of forced into this move. It's clear that these tariffs have really not been working out for the United States. I, like many, believe that the United States, their main strategy for imposing these tariffs on the world was to basically crash the stock market to push people into the US Treasuries market, because there's been a lack of Treasury demand, and the US needs to issue a ton of new US Treasuries this year. They need to issue a ton of US Treasury bonds, and if the stock market is ripping, if other assets are ripping, then nobody's going to buy US Treasuries. But what happened in April? Obviously, we saw the stock market crash as all these tariffs are going to have a big impact on businesses. But we also saw the US bond market crashing as the United States basically imposed these tariffs and told the world that we're going to cut off dollars from you. We're going to cut off all this dollar liquidity. All these foreign entities started to sell out of their dollar assets. They're selling out of stocks. They're selling out of bonds. They're selling out of US real estate. And we saw the bond market crash with the stock market. So basically, this whole plan to crash stocks to save the bonds did not work. And that's a big problem for the United States. They can't have all these foreign entities selling out of their US treasuries. US Treasuries underpin the whole dollar system. If people don't have faith in the US Treasuries market, then it's over, right? The game is over. Part of the reason why gold has rallied so hard over the past couple of months is because people have lost faith in the US Treasuries market. I'm sure that when we got the announcement of these extensive tariffs, we saw people in the US moving from stocks into treasuries, right? As treasuries have been kind of like labeled or advertised as this safe haven asset. But as we saw all these foreign entities selling out of their US treasuries and we saw bond yields spiking, I'm sure it scared a lot of the people here in the United States that were thinking about moving into the treasuries market and staying there. And with that, if people can't go into treasuries, where are they going to hide? They're going to hide in an asset like gold, the other main safe haven asset that people have been using for a long time. So gold went on this crazy rally. It went up to, it might have touched above $3,500 per ounce. I think it's around $3,300 right now. But that's in big part because people didn't feel comfortable in the treasuries market, right? So they went to gold. And we also saw Bitcoin perform pretty well over the past month since we got the announcement of these tariffs. And I think a lot of people were starting to look at Bitcoin more like gold as a safe haven asset, looking at it as a place to hide and not a risk asset. So we saw Bitcoin diverging from diverging from stocks, and we actually saw a little bit more of that this week, which I'm going to get into. So obviously when we got this news, even though it wasn't big news, I think that it was just like advertised as this big trade deal. Still, the stock market liked it, right? Anytime you get a reduction in tariffs and it's going to make trade less expensive, it's probably going to be good for businesses that rely upon that trade. So we saw the stock market up. The S&P 500 was up over 3% yesterday, and it was up today as well. And we also saw gold crashing yesterday. So in April, we saw everyone moving out of stocks, moving out of bonds, and into gold. And when we got this news of the tariff pause, we saw everyone moving back out of gold and into stocks. Now, I briefly want to talk about Bitcoin here because this is a Bitcoin show. And I do think we've been seeing some interesting movement from Bitcoin over the past month and over the past couple of days as well. On Sunday, when we got this announcement of the trade deal, even though we didn't have the details, we really didn't see Bitcoin shoot up. And typically, in the past, Bitcoin has been more correlated with stocks. If we were to get a big trade deal, even though it wasn't, that would be bullish for Bitcoin if people were trading it like a stock, right? But we really didn't see Bitcoin up. In fact, I believe Bitcoin was down a bit on Sunday. And then on Monday, as the stock market was taking off, what was Bitcoin doing? It was going down. Now, I, of course, want Bitcoin to go up. I love Bitcoin. When Bitcoin's going up, I'm making money, right? I'm watching my wealth grow. But I kind of like the fact that Bitcoin is diverging away from the stock market. People, it seems like maybe with the stock market down over the past month, we saw a good chunk of people moving into Bitcoin and treating Bitcoin as a safe haven asset like gold. So people were selling out of stocks and moving into Bitcoin. And then yesterday, as we got good news for business, good news for the stock market, we saw people rotating out of Bitcoin and back into stocks, which probably not a great move, but I like that we're seeing it diverge from risk assets a bit. We also saw something else interesting. We're going to go ahead and take a look at a chart here. This is the Bitcoin market dominance chart. So it's basically comparing Bitcoin's market dominance compared to the whole crypto market, how much of the market capitalization Bitcoin has compared to the rest of these crypto assets. And as you can see, since around May 6th, Bitcoin has dropped in its market dominance. So people have been moving out of Bitcoin and into these shit coins, right? Into these other cryptocurrencies, which are probably worthless, but I would definitely consider other cryptocurrencies risk assets because what are they, right? A lot of them, most people can't explain what they are. Pretty much over 90% of them got to be worthless. So we saw people moving out of Bitcoin, a safe, what I consider a safe haven asset, and into these riskier cryptocurrencies, people trying to get a higher return. And that's showing me that Bitcoin is diverging from these other cryptocurrencies a bit, which would be great, as well as the stock market. So although not great for Bitcoin to see it go down, I like that we're seeing people start to treat it more like a safe haven asset. And Bitcoin is actually back up today, and it's looking like these tariffs probably aren't going to stick. We know that liquidity is going to need to keep rising. I actually just made a video about Bitcoin's relationship to global liquidity, so check that out on my channel. But we know that that's all going to be good for Bitcoin, and I'm expecting Bitcoin to move a lot higher pretty soon here. Now, as people were rotating into stocks yesterday, we saw people rotating out of US Treasuries. We saw Treasury yields heading higher. The 10-year was up around 8 basis points yesterday, and I believe today Treasury yields are also rising a bit, just a little bit, and the stock market is also up a little bit. So it seems like the USA really can't win with the Treasuries market. It seems like people are really starting to catch on to the fact that Treasuries are kind of garbage and they're just going to go down in value. Most other assets are going to outperform Treasuries, and this is a big problem for a market where the supply is going to need to continue to expand. The USA is going to need to issue trillions and trillions more in debt every year. And this kind of makes me think that, I mean, is this dollar system in big trouble in the short term here? Like, what is going to happen with the treasuries market? It seems like they just can't find demand for these assets. Nobody has faith in the dollar long term. And for that reason, I just feel like the dollar is the worst place to be. I would rather be anywhere else. I think that Bitcoin is the best place to be, but I just have a hard time believing that other assets are really going to fall a lot in dollar terms. And I have a hard time believing that people are going to find reasons to stay invested in the US Treasuries market. So this is a big problem for them. I think liquidity is going to have to increase. And I think where we're going to see a lot of demand for these US Treasuries is from the Federal Reserve as they come in and they pick up that lack of demand, right? As the Fed comes in and buys US Treasuries out of the market and they push money into the market. What's that going to do for Bitcoin? What's that probably going to do for the stock market? It's going to push those assets up. While these tariffs have really been causing more problems for the United States than China, I definitely think that China is going to benefit from this tariff pause. We know that China is the world factory. We know that the United States is China's #1 customer. So obviously with a heavy tariff on a lot of goods and services, as well as the smaller tariff on a subset of goods and services, has not been good for Chinese exporters. Exports to the United States accounts for 20% of China's overall GDP, and we saw that China's exports to the US fell by 20% in April. So these tariffs are having an impact on China's export-driven economy. And with this tariff pause, it's going to ensure that China can continue to access this large market. So I do think that it is good for China. I think it's good for U.S. businesses that are reliant upon imports from China. We'll see what happens in 90 days here. I find it hard to believe that the United States is going to be able to maintain high tariffs on the rest of the world because they're going to starve the world of global liquidity. Now, what could they try to gain from these tariffs, right? A lot of people that have been advocating for Trump and these tariffs have been saying that it's a negotiation tactic. It seems like with this trade deal, they didn't really come away with anything. So we will see what the United States can really accomplish by using these tariffs as a negotiation tactic. But I just find it hard to believe that they're going to be able to maintain these tariffs. It's going to lead to problems that the United States can't really afford. That's gonna wrap it up for this one. If you didn't like and subscribe, please make sure to do that now. Really appreciate your support. Thanks for watching. I'll be back soon.